Bismillahirrahmanirrahim. Welcome to our YouTube channel. Please subscribe our channel and press the bell icon for the further notification. Please stay connected with us. We were here. How does cash value work? When you pay premium for a permanent life insurance, they go toward the cost of the insuring you, your policy fee, and the building cash value. In the case of the traditional whole life, both the death and the benefits and the premium are typically designed stayed at the same level throughout the policy is period. However, the cost to insure you can and claim a high as you age, especially when you live past age 80 years. Charging a premium that increase each year would make life insurance unaffordable for many people in advanced ages. Instead, the insurance companies charges throughout the coverage period higher premium than needed to the payout claims in the policies early years. The company invests the money and as necessary uses it supplements the level premiums helps defer the cost of the insuring older policyholders. And by law, when these overpayments reach a certain amount, or they must become available to the policyholder as well as a cash value accumulating in savings account under certain condition. The policy holder can withdraw or take out a loan against the accumulated cash value. It is important to remember that the cash value is usually restricted as living benefit remaining with the insurance company when the insured dies. Any loans against the cash value may reduce the death benefits. Now, term life or the permanent life, which is right for me? This is too short, I think. Details. Acha. All permanent or the whole life policies typically offer the advantages of covering during your entire life, but can charge higher premiums premiums than the term life products. Therefore, your death can similar than with term life for the same amount of money. People choosing whole life are likely prioritize certain features that fit with their individual financial goals, such as the ability to plan for consistent benefits and the premiums, and the potential for the tax refund savings for saving growth over the cash value components of their policy. Mm, for further detail, we can go here. What are the different types of the permanent life insurance policies? Whole are the ordinary life. This is the most common type of the permanent life insurance policy. It differs death benefits along with the savings account. If you pick this type of the type insurance, you are agreed to pay a certain amount in the premiums on a regular basis. For the basic specific death benefits, the savings elements would grow based on the depends on the company pays to you. Universal are the adjustable life. And this type of the policies offers you are more flexible than life insurance. You may be able to increase the death benefits if you passes a medical examination. The savings vehicles it is after the money has accumulated in your account. You will also have the option of altering your premium payments, providing providing there is enough money in your account to recover the cost. This can be useful feature for the economic situation has suddenly changed. However, you would needed to keep in mind and that if you stop or reduce your premiums, and the uh, premium and the savings accumulation gets used up.